So as an investor, you might be wondering what asset class you should invest in. And I've always said it doesn't really matter what the asset is or what you're investing in. It matters what it does for you. And so my guest today, Kevin Bupp, has invested in just about every asset there is. He's really focused today on three amazing assets, which I love. I'm really excited to jump into this. He's focused on mobile home parks, parking lots, as well as build to rent, which are all exciting areas. So Kevin, welcome. How are you today? Welcome to the show.
Bronson, I'm doing awesome, buddy. Thanks for having me. Excited to be here.
Oh, I'm excited to have you here. We're kind of opposite coast. So I'm LA and you're in Florida, but we do all of our investing in Florida. So you're a little closer to the action. So I am a little jealous of that, but that's great, man. But awesome. Well, give us a quick background, how you got started in real estate. I know you've been doing this for a long time. You've got two podcasts out. You've got your mobile home and park investing podcast, as well as your real estate investing for cash flow. But just how did you all get started in all this stuff?
Yeah, that's a great question. I'll keep it fairly condensed. But I've been, just like you mentioned, I've been doing it quite some time. I've been a full-time investor since the age of 20. I'm 43 now. So over 2 decades. And I always like to joke and say that real estate kind of found me. I didn't find it. And so basically I got introduced to it by a gentleman in my hometown. Harrisburg, Pennsylvania is where I grew up. It's the capital of Pennsylvania. A lot of people don't even realize that, but it's a small town. And ultimately I was dating a girl. Her mother was dating a guy, and this guy became my mentor. His name was David, and he was a local investor. And, just being over at her house, visiting her in between classes and things like that. I got to know him and got to really, more than anything, befriend him, but also saw that he lived a very different lifestyle than what I had lived growing up. And we never went without. I mean, very middle of the road, hardworking, family, went on one family vacation a year in the summertime, and always had gifts underneath his tree. And so I don't want to act as though like I didn't grow up poor or anything like that, but we definitely didn't grow up rich. And David's lifestyle was very different. He drove a very different type of vehicle, had a lot of flexibility in his daytime schedule, right? He wasn't working 9 to 5. And it just seemed to have a little bit of a different swagger to him. Anyway, that was intriguing enough to really try to understand what it was that David did. And ultimately I went to a conference with him, learning how to fix and flip houses. His business model was residential, single family and small multifamily properties. He was mostly a buy and hold investor, but we went to a conference together, and I left that conference really overwhelmed and excited, and essentially knew that if I didn't do something, it was just going to kind of, I would move on with life and forget all about it. And it would get, it would get shoved away in the corner somewhere and never to be seen again. And so I started working for David for free. I basically went to him and pitched him my idea of like, hey, I'd love to learn more about this, but like, how can I bring value to your business? Right. Like, you need help. Like, he was a little older. He's about 25 years older than I. So he struggled with technology. And so like, I knew right away that I could probably add some value to him. I watched him struggle putting together a very basic PowerPoint presentation one day, and knew something. It was something I could whip together in probably like 10 minutes. And so anyway, I offered my services, whatever they might have been to him, as far as just helping him out in his business so that I could ultimately be around him and learn what it was he does. And so fast forward now 23 years, again, been investing full time. I've owned hundreds of single family properties. That's kind of, I didn't reinvent his wheel back then. I just literally modeled exactly what he did. It took me about 1.5 years before I bought my first property, and then, hit the ground running, finished up school, quit my bartending job, went into real estate full time. And, along the way, started seeing, other opportunities that were outside of the, typical residential space. That initially started with smaller multifamily properties. And then, as you had mentioned in the introduction, I've owned just about every different type or a variation of every different type of real estate, at least when it comes down to the major food groups, right, of the different types of real estate that are out there. Right. Today we focus predominantly on mobile home parks, which we've been buying for the last decade, parking, so parking garages and parking lots. And then also some of the new initiatives that we have going on are a few build to rent projects in Phoenix, Arizona. So.
Yeah, that's awesome. No, I love your background. It's actually, yours is a little unusual that you started so young. And I think that's what a lot of people, they could go back and talk to their younger self, just get started sooner. And I know some guys in their early 20s that are just killing it right now in multifamily, the Donis brothers. But there are others that do it. And so it's kind of that saying, when the student is ready, the teacher appears. And so some of us get it, later in life. We get it when we get it. I was in my, mid late 30s when I got it. And so, but I got it. So, but I love it. I love that you had a mentor. And I think for anybody listening, whether you want to be active or passive, mentors are incredibly powerful to help get you where you want to go. So that's a huge thing. So that's awesome. Well, let's take these one at a time. When I first heard about you, actually, it was a few years ago. A couple, I knew a guy that I think invested with you, and there was another guy that just knew of you and was listening to your show. And so basically, I just know you've been doing mobile home parks for a very long time.
Mhm.
And this asset in particular, it used to be these were like, 8, 10 caps or higher. And same with self-storage. And now these have gone from, and those were like, way higher than multifamily. And now they've come down to a much more, less stratospheric, 4, 5, 6 cap, depending on what you're buying. But have you noticed with the valuation, has it changed the business, or how has it changed the business of how you make money in mobile home parks?
Yeah, no, you make some great points there. And it's definitely the secret's out, right? I would say that when we started buying them 10 years ago, it was just under the radar. Like those that knew, and those that didn't, right? And it's funny, I say that jokingly, but when I got introduced to the space just by happenstance. I had lunch with a gentleman that was introduced to me by a good friend of mine. He just knew I liked to meet new people, right? And so just expanding your network. And I met with this guy, Randy. He had been a banker for 30 years, commercial banker for 30 years. He lived here in Florida. And I met with him for lunch one day because I was told that he was a pretty cool guy, and I should get to know him. Randy retired from commercial banking. And a lot of the debt he had placed over the last 10 years of being a banker were for RV and mobile home parks here in Florida. And so he saw his clients, doing their thing and making money in this kind of a misunderstood niche. And so when he retired, he bought 3 mobile home communities. And anyway, I had lunch with him, and it piqued my interest in many different ways. And so Randy was in the know, but again, the general population just really wasn't. And even so much that probably the biggest struggle that we had in the first, call it 4 years when we were buying assets, was finding a bank that actually understood that niche. You would go to 20 banks, and 19 of them they just I don't we've never loaned on a mobile home park before. We have no idea, like, don't understand business model. Although it's a very simple business
Mm.
model, they would just pass on it. So it was very difficult to place debt. So fast forward to today, there's billions upon billions of dollars of private equity and institutional capital pouring in and trying to pour into this space. And so the secret is definitely out. The consolidation race is now on. And the biggest challenge with our space, when you compare it to multifamily, is that there's a major supply demand imbalance. There has been for quite some time in mobile home parks, and it continues to get stressed. The more demand that comes in, we're not bringing any new supply to the marketplace, right? So everyone's really fighting for the same opportunities, which really goes to your point of the valuations. Valuations have definitely pushed up quite aggressively, and cap rates have been driven down. In fact, it depends on what month you look at the Green Street data, but ultimately you'll find that there's some trends to where it dipped on many occasions below the trending
Mm.
cap rates for
Wow.
multifamily properties, right? Like to where down into the threes, in the
Yeah.
high threes. And so, with all that being said, I think you kind of made a little bit of a comment beginning of the show related to and I forget, I'm gonna butcher your words, but what my point is that you can make money in any type of real estate today. You
Right.
really can, right? I
Yeah.
don't care what the market's doing. I don't care what interest rates are doing. And I don't want to make that sound simple, right? Like, because you have to work hard to find opportunities, right? To find those needles in the haystack. And so they're still out there in mobile home parks. I would say that we have not bought as many parks in the last 2 years as maybe what we had historically been buying years prior to that, but it's okay. We wait for opportunities that make a ton of sense. We don't want to just hit singles all the time, which singles are fine, but we're really looking for the doubles and the triples, and then every once in a while the grand slam, right? And we're at a point in our business where it's more about slow, steady growth and buying the right assets, making sure that they're the right assets that we want to hold them to a really long time. Because ultimately, we're looking at it as though, not that we wouldn't sell anything, but we're really looking at 7 to 10 plus year hold strategies. And that you find a mobile home park in a great market, it's somewhat irreplaceable, right? I mean, since
Yeah.
there's not new supply coming onto the marketplace. So anyway, the deals are out there. There's still opportunity. We've got some great deals that we just recently closed on, a few that are in contract. And but again, it's a little bit slower of a buying pace for us, but they're still out there if you're willing to work for it.
Yeah, it was interesting. You brought up some points too that are interesting. The valuations, have come down a bit. Hunter Thompson, I know, has done a lot of work in this space, and he was just saying
Mhm.
that he started to switch to multifamily or other types of assets just because of that. But sometimes lower cap rates can mean if you have a value add approach, it actually means you can increase the value much more quickly. Obviously, lower cap
Yeah.
rates and higher income, you actually dramatically increase the value. But I want to segue out of the other stuff, but just real quick, how are you finding these mobile home park deals? Like, what do you have a team kind of cold calling, or like what's the way? I know that's kind of the issue, is sourcing these. So
Yeah.
what are ways that you source these deals?
Yeah, and I think that's something that we probably do. I'm not going to say we're the best at it, but it's something we've been doing for quite some time. 10 years ago, we put an emphasis on building a nationwide database. It's not every state. It's basically the states that in the markets that we would ultimately want to buy. And you couldn't buy it back then. You couldn't go to the many different data sources where one could get that information. For multifamily, other types of commercial real estate didn't exist for mobile home parks.
Wow.
And so we hired a team of virtual assistants. Took about 6 7 months of a team of 6 putting all this information together.
Wow.
A lot of it was manually curated. I mean, literally get on
Mhm.
Google Earth and like scanning and finding the mobile home parks.
Wow.
And so we put together this database, and then we've always had a team behind the scenes, an acquisitions team that either cold calls, direct mails, and all the above, really. And so we've gotten to know a lot of these owners, right? I mean, we keep a pretty stout CRM system, and we keep notes in there of our conversations that we've had over the many years. We've had deals that we've been talking to these owners for probably our records like 5 years, where it like took us from beginning to end to actually get in the buyer seat. And so that's about 90% of our deals. I mean, so these are true off market, not listed, direct to owner, and just really building relationships more than anything else. I mean, it's, again, I go back to saying like double or hitting singles is fine, but for me, we see the opportunity and just not always going after the whales, but I mean, there's still those huge opportunities left. I give you an example. We bought 2 parks at the end of last year. They were owned by the same family for roughly 20 years. They were they're kind of one of the original generation mobile home park families. I think they had probably owned 8 or 9 at some point in time, and so they were big in their town, right? And they were slowly selling off their portfolio. And there's these 2 parks that we had been wanting to buy for a number of years, and we finally got to the closing table at the end of last year. They're institutional size properties, well below market rents, about 40% below what the market is, well maintained, but a good bit of upside potential outside of just rent increases, just operational inefficiencies that exist in the properties. And we paid 13.5 million for these properties. They literally, at the closing table, they appraised for just shy of $24 million. And that was before the value add piece was even put into place. So
Amazing. That's amazing. Yeah.
those are anomalies. I'm
Yeah.
not going to make it seem like that happens all the time, but I mean, those opportunities, they truly are out there, and
Yeah.
you're not going to hit them that big all the time, but
Yeah.
that's hard to find in the multifamily space, right? The multifamily space it's been consolidated. You're really dealing with a much higher level of sophistication most of the time, at least if you're looking at larger properties. If you're playing in that, probably 50 doors and under, maybe not, but for the most part, there's professional operators in the multifamily space. It's very difficult to find things such as that.
Yeah, no, it's amazing. And when you're looking for value, I mean, one of the biggest places to look is for mom and pop type of management. I know that's the attractive part about these mobile home parks, is that they're,
Mhm.
80% of them are, I don't know what the total number is, about 80% or so are run by mom and pops, or even more than that. So
Right.
it's quite amazing. Well, let's shift gears for a minute. Let's talk a bit about something I've heard about, and I've heard about people syndicating and going after parking lots or parking structures. But talk to us about that. What's the profile of it? What are the general
Yeah.
returns? What's the horizon? What are some of the risks involved? I'd love to just know kind of what you guys are doing in that space.
Very, very akin to that of what mobile home parks looked like 10 years ago. The fragmented nature of the asset class, kind of the under the radar. Not everyone and their brothers looking to buy a mobile home park. Well, that's the same thing with parking. I interviewed a guy like probably 4.5 years ago on my show, and I didn't know anything about parking, but I love it. I love niches, right? Like
Yeah.
the nichier the better, right? There's a book, and I forget who the author was. It's called like Riches and Niches, and
Yeah.
that always is stuck in my mind. And that finding those opportunities that aren't yet exploited, right? And as I interviewed this gentleman back on my show, I was just intrigued by the business model. It seemed very much in alignment with that of mobile home parks. I mean, you're renting space, except with a lot of these parking lots. I mean, they truly are in irreplaceable locations. I mean, they're in a scenario, if you're buying in the right market and the demand is good, then it's never going to have a lower value than what it is at its present state as a parking lot, right? If it's an asphalt parking lot, it can't be anything less than that, right? And so as we dug in, I got off that interview and we dug a little deeper, just trying to understand space. Went to all the national association meetings for like a year and a half, just getting to know the people in the industry, and realized that it was a very mom and pop industry. There's roughly 40,000, privately owned parking, garages or lots, combination of the two throughout the United States. And there's only a very small contingent, so less than like 3% of those owners own more than one asset, right? And so it's just it's not consolidated at all, and that to me represents opportunity. So anyway, it's just like a lot of other businesses, right, where we're becoming such a technologically advanced society, and there's still generations of regular real estate owners like we deal with, multifamily and mobile home parks, like they're so antiquated in how they operate things. That is rampant in the parking space. And so very often we'll come across a lot that, still has an attendant there collecting cash, or it's got one of those old honor boxes on place where you shove your dollar bill into it, right? Those are inefficiencies where we see huge opportunity. And so anyway, it's a very fragmented niche. Allows us to buy cash flow and covered land plays and just phenomenal markets, and knowing that there will be a future and higher, better use sometime down the road, but all the while we'll be able to, collect cash flow. As you asked me about returns, I mean, I'll give you an example. I'll just give you a case study, because I think it's better than just saying what opportunity exists as far as returns with parking lots. It's all over the board, right? I mean, we want to get double digit returns on the assets that we buy, but there's plenty that we pass on that would not ever hit that metric. We bought a surface parking lot in downtown Wilmington, North Carolina. Phenomenal market in the historic district. It's two blocks from the waterfront, in line with all the restaurants and hotels and all that downtown Wilmington has to offer. It's at a hard signalized intersection, and it's a tiny parking space. It's 28 spaces in total. And it was a failed development in 2008. Developer lost it back to the bank. Local investor bought it in 2011, I believe. And then basically he owned some other real estate in town. He let his son run it. His son was running it. They had no dynamic pricing model in place. They charged the same fees or same rates, no matter if it was a Friday or Saturday, or if there was a concert going on. They didn't accept credit cards. They always had someone there collecting cash. A lot of that cash probably never made it to the bank, right? I mean, it's just like all these things. And so we actually bought that. I mean, we bought it at its in-place income, or it's, what the prior's P&L would have been under a 5 cap, which it wasn't a 5 cap type of property. But in the interim, we knew we counted cars for a couple of days, knew that there was a ton of opportunity, and that they were just missing out on so much, and ultimately found a local operator that came in and wrote us a double net lease on it, starting at $72,000 a year. We paid $695 for the lot. It's prior year underneath the old ownership, it had done, I think, just shy of like $30,000 NOI. And so right out of the gate, we got an operator come in and pay us $72,000. I happen to know that operator quite well. Now we've become really good friends. And although he doesn't necessarily have to share his financials with us, he's not required to, but he does it because we have other parking assets that he manages for us. And so I wanted to know exactly what that lot did, post COVID. We bought it during COVID, and in 2021, that little 28 space lot did over $140,000 of gross revenue. So
amazing.
That tiny little lot. But they institute dynamic pricing. They've got all the software. They've got enforcement for people that try to steal parking or don't pay. And so, I mean, they run a very efficient model. And so there was even upside in and above where we came in at, right? And it's a win-win all the way around.
Yeah, it's amazing when you identify an asset that is poorly managed. And I think even you talked about, like 3% or less, and what percentage was like 3% own more than one lot. Like people they only own one and they kind of run it themselves. There's a family thing or whatever it is. And there's just incredible inefficiencies there. So if you can come in with some sophistication, I actually have a good friend who's a mentor and friend I've known for years in the Los Angeles area here, and he runs parking lot business where they manage parking lots, or I don't know if they really own much. They just kind of manage for hotels and for different things. And they have 250 employees and, all over Southern California, and just, understanding that business, that is a lot to learn to operate. But you can learn anything. You can learn how to do anything. So I love that you're branching off into other things. And sounds like the returns have been great. And then there is a chance that somebody comes along and says, "Hey, I want to buy the whole land and I want to develop," and you can get a huge, boon when you sell.
There you go. That's the icing on the cake. We don't like paying for that ahead of time, but it's
Yeah.
always good to know that's there.
That's awesome. Are these typically like do you tell investors, or these are syndications, right? So you
That's
tell
correct.
investors like this is going to be a 5 year or 7 year or 10 years, or is it more of an indefinite kind of thing and we'll just see how it goes
Yeah,
generally?
no. So these the assets I'm speaking to right now are in a fund. So we currently have a mobile home park and parking fund open right
Okay.
now. It runs through through August 31st of 2023. And so it's a compilation of the two different asset types in there. And we've always really touted ourselves as long-term investors. So we're not necessarily looking to drive the highest RRs by getting in, and out in years 2 to 3. And now we have sold assets over the last couple of years. I mean, we always look at each deal individually and what makes the most sense for all parties involved, right? Of whether we hold or whether we sell. But ultimately, the investors that are coming in along for the ride with us, they know that it's going to be anywhere from a 7 to plus year strategy. And some of these assets, typically what we'll do, we'll wind down a fund, we'll kind of sell off the assets that we feel don't meet the cut of holding for 10 plus years, and it whittles down to where we get all the return of capital back. And ultimately we'll have 2 or 3 assets remaining in that fund that we've got all the original capital back, and then now just literally cash flow into the sunset with these 3 assets, the favorite ones out of the fund, and the ones that we've all decided to keep together, and let those things ride for a decade plus. That's kind of the plan.
Yeah, that's great. And I think that's awesome. And having a fund is obviously great because it gives you as an operator some flexibility that when things
Mhm.
come around that you like, you can be able to pick up assets that are attractive. Let's talk. I want to also talk about a something that I think is just really it's been on fire, and I think it's that the build to rent space, particularly single or small multifamily, and
Mhm.
people are buying. And I recently heard about this strategy, and I'm not as much of a smaller single family guy, but I love this. People are telling me, parts of Florida, you come in, you put 25% down, it takes 18 months to build, and then you sell it, but you paid basically the buying price of what it was to buy or to build. And you're assuming, at least if things continue, which we don't know they will, but if there is appreciation, then you're able to take over with a great deal of appreciation when and a lot of people just sell. So meaning, let's say it was
Mm.
250, the build price, and then, a year and a half later when you take over, now it's worth, 370. So you only put maybe 60K down, and now you've got all this equity, so you can sell. You've gained 120 in equity, and a lot of people will just sell at that point. But I know the nice thing about it is if it doesn't work to do that, you still got a great asset that will rent very well, and rents, of course,
Mhm.
are on fire in a lot of these growing areas. So talk to us a little bit about kind of what you're seeing in the build to rent space and kind of what you're doing in that space.
Yeah, no, absolutely. And I think it all hinges on the massive shortage that we have of housing in this country, right? And depending what report you read, it's anywhere from 3 million to 5 million, right? And more than likely it's somewhere in the middle there. And starting with the coming out of the Great Recession, we didn't start building as fast as what we need to. We got through kind of all the excess inventory that was left over from 08 and 09 and 10, but then after that, like we were very slow with new housing starts. And then the pandemic hit, right? And so we never really caught back up. And then the pandemic hit, and that threw everyone into a flurry again. And ultimately, we've been running behind for many years now. And there was a stat put out the other week that if all the nation's largest home builders like the KB and Lennars of the world, if they literally all doubled down starting today, doubled their production, that we still wouldn't catch up to the deficiency in the next 10 years. We'd still be behind
Wow,
the 8 ball a little bit, right? And so,
amazing.
the build to rent sector, there's a particular demographic that's really catered towards, there's the Gen Zs, millennials and Gen Zs, more so the millennials are in the household formation years right now. And it's a massive contingent. It's huge. And a lot of millennials are choosing. They're renters by choice. They want flexibility. They're very different than us and our parents were. They just look at things very differently. And a lot of them saw their parents go through the Great Recession and lose their home potentially, and right. And so
Right.
they cherish things. They cherish different things than maybe what we did at that same age. And so they're in these household formation years. They like having the dog. They like having the little backyard, but they don't necessarily want to own it. So there's that contingent, and it's a very large one. And now with interest rates where they've gone, right? Like there's would be home buyers that, would love to own a home that literally have been priced out, now are being
Yeah.
forced into that rental pool. And so, it's just really, it's pairing those that want to literally, they want that single family house experience. They don't want to live in an apartment with, someone above and below and eat to either side. And there's definitely that's a fit for somebody, but there's this whole other contingent that are looking for that single family American dream, the experience of it, but without actually having to own it. And so
Right.
that's why the build to rent space is so hot. It's interesting in that there's billions upon billions of institutional capital trying to pour into the space,
Mhm.
trying, but the product isn't there.
Right.
The product doesn't exist. I mean, it's being built. There's large, track builders that are building communities. Florida's got a ton of build to rent communities happening. Arizona's got a lot of communities happening. But again, we're nowhere near keeping up with the demand for for the product that's getting put out of the people that need it. And so it just allows us to, we love the multifamily space. Mobile home parks are multifamily. We love traditional multifamily. This allows us to basically build a brand new product in a high demand marketplace that it's one that we'd like to keep for 10 plus years, right? No mechanical issues, no deferred maintenance issues,
Yeah.
any of that. I mean, it's a brand new product right out of the ground. But the one special thing that we're doing, these are all urban infill projects, so they're smaller in scale. The smallest we 20, with 4 projects happening right now, it's 21 units. The largest one is roughly 50 units, but these are in the trendy neighborhoods, urban infill locations, again, irreplaceable locations. They're not like on the a lot of these build to rent communities are happening on the outskirts of town, right? Where there's large swaths of vacant land. And I like that business model, but I think it's fairly commoditized. Whereas when you've
Right.
got an urban infill type of environment, again, there's only so much land in those particular areas. So that's who we're really catering to there. But no,
Yeah.
it's a phenomenal space, and it's just, again, just not enough product out there to serve those that are in need.
Yeah, it is interesting too about the shortage because I've heard different studies. I just put a report recently about and it kind of brought up 3 different studies, and it was like from 3 million to 6.8 million, depending on what numbers you believe. But whatever, we're short millions of apartment
Yeah.
units or housing units in general. And what we're building typically, besides build to rent, what's being built are these huge kind of like huge homes in newer areas. So we're not building the starter homes, right? So people are
Mhm.
getting pushed to mobile home parks, multifamily, or maybe these smaller build to rent type of thing. So I think it's a huge way to take advantage of what's happening there. Um, Kevin, I wanted to ask you one more question, then we've got to kind of wrap up because of time. But I just, I feel like you have a wealth of information. You've got your mastermind and your podcasts, and there's all kinds of ways people can connect with you as far as investing, and you're adding a lot to the community. But can you just maybe just share a little bit? You work with a lot of people, a lot of passive investors, a lot of people that are trying to do what you're doing. What's one piece of advice you have for people that are just getting started? Like, what's one good action step they can take?
Yeah, that's a great question. I feel like there's almost too much information out there nowadays. Back when I was getting, I sound so old when I say that. Back when I was getting started, I had
Like when I was young,
cassette tapes, and CDs, and it
right?
just there was limited information out there, and on just real estate or specific niches. And so I would say, first and foremost, start absorbing information, but I would try to pick a lane or two to focus on. The first of those lanes being what type of asset, what asset class do you feel is going to be a good fit for you? And I don't think there's a right or wrong answer there.
Hmm.
I don't even know if you can say, hey, find one that is that's aligned with you, your personality, your overall investment philosophy. I mean, I think some of that's partially true, but at the end of the day, a lot of these asset types, I mean, they're investment vehicles, right? Find one that you feel is going to be a good fit for you, and then find the one in that space. Find that individual that there's 100 people talking about multifamily. Listen to them all, but really find the one that if you feel is best alignment with you and your own internal philosophy and just how you think about life, and just and then hook yourself up with them, attend whatever. If they have a podcast, more than likely they probably have some type of educational products or what have you. Get in alignment with them, find out how you can bring value to their business. Looking back on David, my mentor, you know, I think if I'd have just, I don't know, he was a nice guy. So he might help me either way. But I think if I'd have just went and tried to take from him, at some point in time, he probably would have gotten a little fed up and probably would have pushed me off to the side. Say, hey, buddy, I know how to run my business. You go on and do your thing. And you're not really bringing any value here. And I think so leading with value is by far the most important thing. And so when you find that path, that asset class, and the individual that you want to align yourself with, make sure that you lead with value. How can you bring value to their business? They're already at a certain stage of their business or further ahead than you. And so what can you bring to the table to help them get even further along? And so I think as long as you go with that mindset, I think you'll find that individual, that mentor that is in best alignment with you and your interest. And ultimately, hopefully you'll bring them a ton of value, and it's a win-win all the way around. So I just think that it's a way to expedite the process, right? I mean, we could all fumble through this and do this on our own, make a lot of mistakes along the way. And, but ultimately aligning yourself with that individual or group of individuals that are already where you want to be is definitely the fastest path to success.
Yeah, that's it. I mean, education and also bringing value. I mean, bringing value to whether it's family members or friends, just educating people about what's happening, and also just getting into some sort of mentor relationship. Doesn't have to be a formal relationship, but just really bringing value to them. And that's kind of how my career changed. I found somebody who was successful, and I got around them and just tried to find a way to help solve a problem. When I did that, it just opened up a door for me. And then we raised $15 million together over the next couple of years. So that's kind of what really launched my multifamily or real estate career. But anyway, well, awesome. Well, Kevin, I really appreciate you. I appreciate all the of course, the conversations today, but all you're adding to the education, the real estate education community, because I think it's something, as we help each other, it's amazing how the pie gets bigger and how we just, continue to grow both as individuals and educators, as well as people that are partaking in it. So I love that you're doing your mastermind. You've got 2 podcasts, you've got your investment fund, you've got your book behind you there in the background. I love that. So what's a way somebody can connect with you if they want to learn more?
Yeah, no, that's great. If you want to learn learn what we're doing in the investment space, as far as mobile home parks, parking, or build to rent, you can go over to investwithsunrise.com. Again, that's investwithsunrise.com. And then you can find out what I'm doing, listen to my podcast, and any of the other initiatives I'm involved in by going over to kevinbupp.com.
Awesome, man. Well, cool. I appreciate you coming on today. This is great. And thanks so much.
Thanks for having me, Bronson.
Okay, so Kevin Bupp has been around for a while. Just a great guy, doing some amazing stuff, has a fun doing all these different assets. A couple takeaways for me. Again, this comes up, I swear, in almost every single episode. So if you're paying attention, you'll hear this again and again and again. And it can happen for me too, is having a mentor or getting educated or getting around people and finding a way to bring value. And just, when you can learn from others' experience, it's huge. It's said that a wise person learns from their own mistakes, but a genius learns from the mistakes of others. I can't remember who quoted that, but it's true. Is if you can get somebody who's made some mistakes, and that's a great question when you're meeting people too. Don't just ask about their best deal or their home run. Say, tell me, what's something that didn't go well? Is there a time where you lost money? And asking those questions, you'll learn a lot more than just tell me about all your greatest successes. So those are really important. And then also, when you go through challenges, you have someone that you can call up and you can talk to, and you can say, hey, what do I do in this situation? Which I do to this day. I actually did today. I called up a mentor and it was asking a question. Hey, what should I do in this particular situation? And it was very, very helpful. So that was awesome. And then also too, we talk about as passive investors, finding not necessarily, don't fall in love with, the property or whatever asset class it is. Really look at it and say, what does it do for you? And does it get you where you want to go? And I think what he said, the riches are in the niches. It's true. So he's got parking lots, he's got mobile home parks, and he has build to rent. These are all awesome spaces. And if you can find something that has a lot of upside, potentially, it can be great. So anyway, so I think those are some great lessons from today. I encourage you to go check out his podcast, check out his investment stuff. And I appreciate spending this time with you. Jim Rohn said you're the average of the 5 people you spend the most time with, and you were spending time with Bronson Hill and Kevin Bupp. And we'll look forward to seeing you on the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.